So this is Millennial Money Mindset. Thank you so much for joining us. My name is Neil Doig. I'm the founder of Money Tips and the author of the book Millennial Money Mindset. So this is aiming to get more money in your pocket, more time in your day, and more happiness in your life. So we're going to go into essentially thinking about the aim of the game is to build assets that will pay you an income so you don't need to work anymore. So essentially the aim is to have property. You can put money into the stock market. You can put money into a bank and get paid interest. You can put bonds. You can buy intellectual property. So the aim of the game is to build up enough assets to pay you an income to cover your expenses. So think of this like growing a tree, and we go through the 5-step method. So the 5-step method, I'm going to give this away, is number 1, own yourself first. So become the owner of your own destiny, the owner of your own decisions, your own responsibility. So be responsible, be proactive, and pay yourself an income. So think of yourself as an owner. Think of yourself as a business owner. So why are you working? You're working to give yourself and your family a better life. So many people I see go to work and they work all the month, and at the end of the month they have more month left than the end of the month than money. The aim of the game is to save as soon as you get paid. Pay yourself first. As soon as you get paid, set that up. Just think of it like a business. You wouldn't have a business that's not profitable. You want to go to work and take some of that money. So as soon as you get paid, pay yourself first, and do this automatically. The secret is automatic to do this. You're never going to do this if you wait to the end of the month and save. It just simply doesn't happen, and it means that then you're buying. Every month you're putting money away into your savings, and once you have an emergency fund, then you put money into the stock market. So number 2 is dream big dreams. So create a life plan. Where do you want to get to? Where do you want to end up? So many people I know don't have a plan or know where they're going to end up in life. So create a life plan, write it down. If you get my book, it includes a life plan. Write, where do you want to live? What do you want to be doing? What's your family? How do you want to spend your time with your family? So number 2, dream big dreams. Write down your 5-year goal, and actually your dreams need to be big enough to get you out of bed in the morning. They need to be, you need to get up and have that passion and that drive to get you out of bed. So that's dream big dreams, and actually understand where you want to get to. So that's number 2. Number 3 is have an emergency fund. So have an emergency fund. So pay off high interest debt first of all. Once you pay off that debt, then you have a 3 to 6 months of cash saved up, or at least £1,000. Once you get past the big milestone, is getting past £1,000. If you can get to £5,000 in just savings, maybe that's a way off yet. But if you can save that up, then you have a whole massive peace of mind. The worst things can happen in life and you'll be all right. Your car could break down that you need to get to work. You could have, you need to visit a family member, or your boiler could break down in your house. If you have a savings emergency fund covered, then the worst things can happen and you'll be all right. And so that's having an emergency fund. Pay off your high interest debt. So you don't want to be having high interest consumer debt. Get rid of that. There's no point putting money into the stock market and get 8% returns if you're having, if you're paying 20% on these credit cards. Some of these credit cards are extortionate. They're making money out of people's misery. They're 80%. This is crazy money that people are paying on credit cards. So yeah, clear off your debt as much as possible and have an emergency fund. So that's number 3. Number 4 is diversify. Don't buy one share. Don't buy one Bitcoin. Don't buy one asset. Have a team of assets that are working for you, because then they're going to cover you for they're going to work at different times of the business cycle. They're going to cover you to make sure that you're all right. So for instance, you can have money in the stock market, you have money in the property. You can buy property today from in these unit trusts, in these real estate investment trusts for £10. You're buying part of the property, but you can buy it real cheap. But spread your money around. Keep your money in cash. Keep your money. You can buy Bitcoin, but just make sure that you have or cryptocurrency, but make sure you have a well diverse portfolio. Think of it like a team of assets that are working for you. And number 5 is rebalance, which sounds complicated, and perhaps it is, but essentially every year you want to sit down for 90 minutes. You just need to, all you need to do is to invest in 90 minutes is sit down and make sure you're investing your money to maintaining where you want to get to. So maintain your asset allocation. So asset allocation is the single most important thing you need to understand about investing. It's how you allocate your assets. This could be money in property, this could be money in cash, this could be money in the stock market, but you want to have a diverse portfolio. And every year, basically, you take the winners and put them back into the rest of your team. And this means that the studies have shown, it's all evidence-based. I'm using all based on science, based on reason, based on mathematics. If you're using rebalance, there's loads of studies out there that have shown that actually to do this every year, it's going to put you in real good stead of actually getting money into your pocket. So the upcoming crash, so there's going to be a recession next year, according to a Wall Street analyst. And so think of the business cycle. The recession isn't necessarily bad. Millions are made in recessions. So people think recessions are all doom and gloom. It's not the case. It's not the case. It's actually, you can make loads of money. Most millionaires are actually made in recessions. This is good news. This is good news that we're heading into bad times, because this is where you can make your money. This is where you can get things at a discount, where the market crashes. And if you have cash at hand, if you have money in your pocket, you can go in and buy things at a discount. This is good news. So understand that there's no right or wrong. It's just a different time. So recession, there's good times and bad times in the economic cycle. Think of this like the seasons of the year. So there's not right or wrong. Summer's not better than winter. They're both good. They both serve a purpose. You can't have summer without the winter. You can't have recessions without prosperity. And it's the same with investing. You need to understand this. So have the seasons of the year. So seasons of the year. So we're going to go into this today. We're going to go into this, and so you can understand how you can prosper in the upcoming recession, because many people are going to get, the winter is coming and many people are not prepared for the upcoming recession. And this is where people get fortunes can be lost, but also fortunes can be made. If you're smart, if you have the knowledge, if you have the education, then you can benefit, you can create long-term wealth. And stick right here, because this is exactly what I teach you. This is exactly what my book Millennial Money Mindset teaches you, and this is exactly what my course teaches you on Udemy. You can get it at my website, moneytips.org. Tips is spelled with 2 P's because it stands for tax, investment, property, pension, savings. So I'm not a financial advisor, I'm not an accountant, I'm not a solicitor. So I educate and empower people to make their own decisions with money. So you are in charge. You're in your own destiny, and you actually make better decisions. Once you have education, once you have experience, this gives you power. This gives you knowledge. Knowledge is power, and knowing how to act and making sure that you know what to do, making the right decision. And you can automate this. It's not difficult. You can actually set up an automated payment system every month into the stock market, and you don't have to think about it. You don't have to worry about it. You don't have to stress about it. You don't have to time it. You don't have to spend your Sunday mornings reading a newspaper or going on the internet to try and do your research. You can automate it, and you can buy the whole market. You can buy the FTSE 100, which is the 100 biggest shares in the UK, or you can buy the S&P 500, which is the whole 500 biggest shares in the USA, or even better, you can buy the global market. This is every share that's available to buy, and you can basically own the market, own the world, and own the means of production. And this is the secret to wealth. This is what I learned when I was a financial advisor. This is what they taught you as a financial advisor. This is what I used to teach, or this is what I used to give advice to million pound clients. I had someone who had 10 million pounds in Bitcoin winnings, and they came to me to give their investment advice, how to build their portfolio. And this is exactly what I'm teaching you. For if you're watching this now, I'm not charging you anything. I'm just teaching you this. So think of it like the seasons, like the business cycle is like the season. So we go through a cycle. There's ups and downs of the cycle. It's not good or bad. It's not right or wrong. It's just different. It's different times, and different asset classes perform better in different times of the market. And think of each individual price is like the weather. So you can't predict the weather. Even the best scientists today, you can't predict what's going to happen within day. I know that you watch the weather forecast, but they don't get it right all the time. They can't predict. It's too many variables, too much happening. It's the same with the stock market. It's virtually impossible to predict the ups and downs of the stock market within day. It's so difficult. There's so many variables, so many different things happening. But what you can do is you can own the means of production. You can own everything. And then basically, if the market goes up, if the market goes down, you're still winning, because if you automate it every month, then when the market's high, you buy less individual shares. But when the market crashes, you're getting these shares on discounts. Every month you go in, every month set up an automated payment system to buy shares in the stock market. Then you're basically buying this at a discount. If the market crashes, it's a good thing. It's not a bad thing when market crashes. There's loads of the tabloid newspapers make it out as like a really bad thing when the market crashes, but this is a good thing, that you're getting the same shares, your same companies, but cheaper. You're getting it at a discount. This is good. If you're a long-term investor, if you're thinking 5, 10, 20 years time, then it's a good thing if the market comes down, because you're buying more assets, you're getting more businesses for the same money. This is a good thing. It's not a bad thing. So that if you know what you're doing, this is the thing. Risk comes from not knowing what you're doing. If you understand how the market works, or stick right here, because of exactly what I'm going to teach you. So there's prosperity, there's liquidation, there's depression, and then there's revival. These are the stages of the business cycle. Think of it like spring, summer, autumn, winter. So we're going through into an autumn month, if you think of this. So we're going into the kind of the fall. If you think of it, the Americans call autumn fall, and this is what's going to happen. So probably next year sometime, the market's going to drop, it's going to crash. This happens when credit tightens, which means that the Federal Reserve hike interest rates, so they push interest rates up, or the Bank of England push interest rates up, which is exactly what's happening. It means that less money is available, and it means that less money is being spent on businesses. It means less money is available in the market, and it means that there's less money to invest, and that leads on to a recession. And then it means that the economy shrinks. It means that jobs are lost because the economy shrinks, and it means that there's less people buying goods and services. Less people go buy luxury goods, for instance. And it means that if people aren't buying these goods, or people aren't using these services, it shrinks, and people lose their jobs. They're not having enough people fulfilling these services. And it means that stock prices fall. This is exactly what we're going to be seeing in this next, most likely at the end of this year or next year. Interest rates will then fall, and what happens? The cycle starts again. So then the economic output increases, jobs are recovered, people are employed to cover this employment. Then the Federal Reserves or the Bank of England print money, and then credit expands, and that means that's the recovery stage of the business cycle. And then it comes to the maturity stage. You get GDP growth, which is gross domestic product. You get a slow return of inflation in the mature summer month, if you continue that analogy. And then you get a steep flattening yield curve, which is basically the price of bonds, which is lending money. And you get a heightened volatility. And then after you get that the summer, then you get the autumn again, and the same thing happens again. So to know what to do in these markets, but the good thing is you don't need to know about this is just the theory, but what you can do is just set up every month. You're buying you're buying into the stock market every month without fail, and then you're buying on the up in the good times, and you're buying in the bad times. You're buying the ups and you're buying the downs, and over time it's going to build up over and create compound interest. So let's go into this. So right, we're going to go into when the autumn month. So essentially the fall of the economic cycle. So it's when the economy is cooling down and uncertainty is growing. So what you can do is bonds do really well. So when you're lending money to corporations or government, so if you think of premium bonds, for instance, that's corporate bonds, they do really well in the kind of the autumn of the economic cycle. What do well? Dividend stocks. So if in the kind of just before the recession, companies that do well are companies that give good dividends. So dividends are so energy companies, for instance, oil companies, food companies, so Tesco, Sainsbury's, these food companies, or medicine companies. So even in the downturns, even in the worst recessions, people still buy food, people still buy medicine for their children, people still heat their homes. So you can buy these companies that do well in these times, and you can benefit from this. So bonds, dividends, and precious metals. So gold is really good in bad times. So gold, I bought gold during the 2008 crash. All the stock market was crashing and gold was the only thing rising during these bad times. So things that do poorly are things like speculative stocks. So things like tech stocks, for instance, they tend to do badly because of they don't have tech stocks need a lot of money, they need a lot of capital, and in bad times there's not enough money around, there's not enough credit available in the bad times to invest in these speculative companies. So tech stock tend to not do well during recessions. So in the deep dark recessions, so what does well? If you have cash at hand, you can go in and buy. You can go and buy the opportunities. So the stock market crashes. If you have cash in your bank, if you have cash in your pocket, if you've got a safe, steady, secure job, you can go buy these companies at a discount. You can make loads of money. Millionaires are made during recessions. This is where people panic and sell. And if you have enough cash to last you, if you have enough cash flow is king, which cash flow means that money coming in to cover your expenses. And if you have enough cash, then you can actually buy up and do really well in recessions. So risky assets, as we said, tech stocks tend to do badly, risky assets and sectors vulnerable to recession. So kind of luxury goods can do really badly because people don't have that money to spend on the kind of the kind of exuberance. They tend not to spend on the kind of the exuberance, and they tend to not spend so much. So, but then once the recession is over, then you tend to get the spring. This is the recovery. So think of this as the season of growth. So think of like the spring in the seasons of the year. You get these buds, you get these the buds growing, the buds growing, the economy starts blooming and things get better. People get more positive. It starts warming up. That frost of the recession starts to thaw, and you kind of these buds of hope emerge from the ground. And it's the same. You start getting these buds of new companies growing. So during deep dark recessions, more companies, successful companies, grow during the recession because people lose their jobs and they decide, right, I'm going to start my own business, and they start their own business. So Amazon, there was like Netflix, I think FedEx, all started during a recession. It's real good. A lot of businesses start during recessions. So which companies, so if never been a better time to start your own company during a recession, because people get lose their job, which means that they're looking for employment, and you can employment if you're a business owner. So real estate tends to do better in these the spring, the recovery of the business cycle. So if you can have enough, if you can have all your ducks in a row ready to go and buy a property during the spring months, this is where you're going to make your money. So what does badly? Bonds, where you're lending money to companies or governments, tend not to do very well in the recovery, and cash doesn't get much return. So it tends not to do very well. You put money into a bank, and whereas the stock market recovers, and you tend to get real good returns when in the recovery. So the stock market recovers and increases, so you get a better return. That's the spring of the economic cycle, the kind of the expansion. So then after that spring, you get the peak, you get it's a summer. So it's the summertime of prosperity. So this is the summertime of the economic cycle where the economy is at its best, but it's not going to get any better. So the good times come around, and is where inflation increases because they can't, there's not enough money to, well, there's not enough goods for people to buy. So prices go up, and that pushes up inflation. So the economy is at its best, and the stock market rises, and you get this exuberance, you get this kind of thinking that the good times will go on forever. What do well is defensive stocks. So this could be, for instance, utility stocks, insurance companies, weapons. If I know it's probably not morally right, but defensive companies like that spend on military tends to do well. They provide essentials like commodities do really well. So if you look at the price of grain, wheat, gold, copper, all do really well because it comes down to demand and supply. So demand and supply sets price. So commodities do really well because they're things like cars get built. People have more money in their pockets. They go and buy cars. They go and buy washing machines. They go and buy dishwashers, and all these things require commodities like metals and copper and things like these like metals. They're required to build these machines, to build cars, to build washing machines. And so the supply is fixed, but demand rises, and there's a supply demand tension, and it pushes prices up. So high risk stocks can do well as well. So in the good times, tech stocks do well because there's a lot of money around, and then people put money into the tech stocks hoping to get a good return. So that's just a kind of an overview of the essentially think of this is how to survive and thrive in the upcoming recession. So really the best thing to do is diversify and pay in every month. So the real secret is to make regular contributions and compound. So compound is compound interest. So interest is simply you put money into a bank and you get, say, 5% interest on that money that you get back. Now, today, the great news is you can put money into a bank and you now get paid interest. Before, say a few years ago, you didn't get any money back from that bank because interest rates are at zero. Now interest rates have risen. The good news, if you put money into a bank, you get money in return, and that's that interest. So you put £100 in the bank and you get 5% interest rate, you get £5 back just by putting your money into a bank. And compound interest is just interest on that interest. So you get interest, then you get more interest the next year, then you get more interest. You get 5%. So you get £100 you put into the bank, you get £5 back. Then the next year you put £105 in the bank and you get interest on that interest, and it builds like a snowball. It builds like the snowball. The mathematics on this is amazing. You'll be mind blown. Just go onto the internet and just put in a compound interest calculator over 10-20 years time and just put it in, and it literally skyrockets. If you can be consistent and make regular contributions and compound, consistent contributions compoundly, then that's the secret to wealth. Look at all the experts, look at Warren Buffett, look at anyone who's made money. That's what they'll tell you, and that's how you build your net worth over time. Just simple things like that. So compound interest. So it's the process of earning interest on the initial investment and any accumulated interest over time. So it allows your money to go exponentially. It goes as the interest added to the original amount, and that you get this compounding effect, and it just grows and grows and grows. If you can hold out so think of it decades, not days. So you've got to think decades with investing. It's a long-term process. It's not a daily occurrence. You're not trying to buy and sell on a day. That's not how you make money. You've got to think decades. So think of it so a good example. So if you've invested £10,000 at an annual rate of 8% for 30 years, that £10,000 would grow to £100,000 just by adding that interest, without even adding to that. That's crazy. So the impact of consistent contributions is, I can't stress that enough. If you can, and the secret is to automate it. Don't try and do this every month, because you'll forget, or you'll spend your money, or you'll get scared. We are emotional creatures, and we're more emotional than we are rational, and we don't realize this. Investing is an emotional game. You've got to hold out when the times are tough, and that's the real secret. So if you can invest £1,000 a month, for instance, at an annual rate of 10% for 30 years, that investment will grow to over £1 million. Imagine that. So let me say that again. So invest £1,000 per month. That might sound like loads, and perhaps it is. Get an annual interest of 10%. Put that into the stock market at a higher risk, potentially. I'm just using this as an example. I'm not necessarily saying you need to do this, but yeah, your investment will go to over £1 million. And that's over 30 years. And that just shows the incredible wealth building potential of compound interest. And there's a compound interest calculator. So yeah, just go on the internet and just use that calculator, and it's well worth it. So the real secret is to split your money between land, business, and keep some money in reserve. So if you can buy property, I know properties are crazy expensive, or you could buy exchange traded fund, which is essentially you're buying a part of that property, you're not buying the whole thing. Then put money into businesses, so money in the stock market. You're owning the means of production. So what I mean by that is, but you're owning the farms, you're owning the factories, you're owning the finances, you're owning the fisheries. You need to make capitalism work for you rather than you working for capitalism. Let me say that again. So you need to make capitalism work for you rather than you work for capitalism. If you understand that, then you're already winning. So what is money mindset? So it's the most important thing. So the two most important things are your money mindset. This is your thoughts and feelings and emotions around money. And it's the one big thing that holds people back. So it's the decisions you make around money. It's your relationships you have with money, which is often learned from our parents or our schools or the people we spend around with. A lot of our money habits are picked up from the people around us. It's the inner game of investing. So there's two things. So there's an inner game and an outer game. So the inner game is your money mindset, your thoughts, your feelings, your emotions around money. And your outer game is the asset allocation. So these are two fundamental things you need to understand: your money mindset and your asset allocation. So asset allocation is simply how you allocate, how you decide to put your assets, like money, like shares, property, or bonds, for instance, or commodities. These are all assets. And I've created a card game called Football Formation Asset Allocation to teach you how to do that. So think of it like building a team of assets, building a team of players. So if you live a good life, you live to 90 years old, like 90 minutes on the pitch, score a goal, money goes into your pocket, concede a goal, money goes out of your pocket. And each player is like an asset class that's working for you. So this could be the roof over your head. This could be the pound coin in your back pocket. This could be money into the stock market. And you want to build a team of assets that are working for you. So people are going to work harder. You work harder for you than you work at your job. So once you have money working for you, you have money working for you morning, noon, and night. So you can have money when people buy if you own McDonald's, for instance, every time people go and buy a burger, you're getting part of those profits. If you own Apple and people buy an iPhone, part of those profits go into your pocket. If you own Sainsbury's, for instance, then part of those profits, every time people buy a loaf of bread, money goes into your pocket. So so essentially it's owning the means of production, owning owning the world. If you don't try and pick individual stocks, own the means of production, own the stock market, own thousands. You can own thousands of different companies all around the world. And this is the secret to wealth. This is what I learned as when I was a financial advisor. This is what I've learned over 20 years of investing myself. This is what I've learned as an author of the book, Millennial Money Mindset. If you want the fruits, you need the roots, which was shortlisted for the Financial Times Brackenbauer Prize in 2018. So let's get an action plan together. So yeah, you need to take action. So it's easy to sit and listen, to consume and actually not get anything done. At least write something down, take action. You need to take from your thoughts into tangible action. So write something down. If you don't know, I've got this planet. I've got a number of different books that aim to make your life easier. So one of a real good, I have a Money Tips as a publishing company, and we publish the best books of all time. One of the books is, I've created a life planner, and basically you just write down your goals, your aims, your aspirations, and the science behind this is amazing. If you simply write, the act of writing down your goals, it's much more likely to achieve what you want out of life. So Dr. Gail Matthews, he said that writing down your goals means you're 42% more likely to achieve it than those that don't. So just imagine that. So just by the simple act of writing down your goals, what you want to happen, having that thought and that clarity and that decision of what you actually want out of life, means that you know what you want, and you're much more likely to actually for it to happen. So yeah, this is if you go on my website, moneytips.org, it's available on Amazon, but go to moneytips.org/books and you can get this planner. And yeah, it's a real good tool, and you can simply follow the tips, and it's got all, you can budget, and you have all these different planners. So that's a real good tool to use. Write down your goals, write down your aims, write down your aspirations and where you want to get to in life. But I also got a course on my website, moneytips.org. I should go on, it's linked in either my profile or it's linked on the Meetup. We run a money meetup. We run it every month, the last Tuesday of every month. We've got courses, a 5-step method to money mindset. We went through the 5 steps, but it gives you it gives you breakdown of how you can achieve this. So the 5-step method is: own yourself first, dream big dreams, have an emergency fund, diversify your portfolio, and then rebalance every year. And then that's the 5-step method to getting money mindset. So we've got books, we've got courses, and come and join the membership. So I've got it's on Patreon. So there's a link in my website. You go in and pay for the meetups, and we give you free gifts and we give goodies, and you have actually you get to have a members area where I give loads of exclusive bonuses and freebies in that members area. So we meet up every month. So yeah, so that's a 5-step method. So own yourself first. So be proactive, be responsible. So take responsibility. So you're here, you're watching this, you're taking responsibility. Responsibility just means you're responsible, you're able to respond. So we're, as humans, we all have choice. We can make decisions in our day. So we're able to respond. And this means that you're here, you've chosen to turn up today. You've chosen to actually come and listen and learn and improve your life and improve your finances. So number 1 is, yeah, be responsible, which you've turned up today. Be proactive. So you actually have to take action. You've got to you can't be reactive. You've got to go out into the world and actually make change. You've got to do something. You've got to write down your goals. You've got to go take a course, learn how to do it. Or you have to actually go and invest. You have to actually press that button and actually invest into the stock market. You have to take that bold step forward, which can be real scary. But that's why I'm here. I'm here to stand beside you, to give you guidance along the way, to make sure that you don't make those mistakes. You don't, and we talked about those scams, that 1.2 billion pounds that is lost to scams in 2022, which is crazy. So we give you the best platforms, we give you the best tools, the techniques and the tips to make it easy on yourself. Don't make it hard on yourself. We're all busy people. We're all massively stressed and busy. We're busier than ever before. Time is our greatest asset, and we're all time poor. We've got more demands with our friends, our family, and work. So yeah, use the 5-step method. Make it easy on yourself rather than trying to figure it out yourself. It's taken me 20 years to create, 20 years of investing, but it's simple, achievable, and effective. So yeah. So hopefully that makes sense. So why invest? So we talked about being, we're all time poor, no time in your day. We don't have time anymore to actually learn about these things. We're not taught this about at school. We're not taught this from our parents. Didn't need to know about this sort of things. They had in our parents' generations, you would have a guaranteed income for life. You'd have a pension for life. You wouldn't need to know about investing in the stock market. You could buy an affordable house. Today, that's completely different. You need to understand this. And the way to do this is to teach yourself or to educate yourself by coming on to meetups like this, or learning on channels like this. So there's so much information out there, and it can be overwhelming. It can be so overwhelming to actually know who do you believe it, who can you trust, which is right, which is wrong. So everything we talked about today, it's all based on evidence-based research. So it's all based on the best information out there. It's all based on I learned this as a financial advisor. I've been doing this. It's tried and tested. Myself as I've been investing each year, and yeah, so scams have increased. 1.2 billion pounds were lost in 2022. So yeah, and 400 million pounds of assets were lost each year as it's not tracked. So people don't know where they keep their money. If they die, for instance, they don't know where that money is. And there's so much confusion out there. There's thousands of different products, different investment products, different so much jargon, ETFs, unit trusts, fractional shares. There's so much jargon out there. So this is why it's good to understand and educate yourself on what to do and how to invest. So house prices are becoming unaffordable, especially if you live in London or any other big city. So house prices are crazy, very little government pension. So yeah, today, if you put your money into a government pension, it might not be enough to pay for your expenses, or you're going to have to wait till 67 to be able to claim your pension. What we're teaching you here today is to become financially independent and retire early. So you can retire earlier than 67 by putting money into ISAs, or you can put money into you can actually put a personal pension, so a thing called a SIP, which is a self-invested personal pension. You can invest, and there's real good tax benefits to invest into these. Just think of these like vehicles. You're just putting these in, and they're you don't have to. Yeah, essentially, they protect your money from tax. So inflation is a worry to many people. So inflation is the cost of living. So we're living through the cost of living crisis at the moment. So inflation is risen loads. So yeah, so inflation is eroding our wealth. So the spending power in our back pocket is much less than it used to be because inflation. So a pound coin can buy less than it could do 5-10 years ago. So you get more. You could buy more things with a pound coin than you could have done 10-20 years ago. So 1.5 million people have less than £100 in savings or investing. So this is why you need to understand investing. So it's about life. It's about having a better life. It's about having freedom, and it's about having the pursuit of happiness. So it's about having free from stress and worry. So money worries tops the pole as the biggest cause of stress and worry. So why are you working? You're working to give yourself and your family a better life, more experiences, nicer things, freedom to choose how to live your life, time to get to spend how you want, work for joy rather than work necessity, to have stability for your family, security as well. So you're not stressed about the next paycheck coming in. You're not stressed about the bill landing on your doormat. You're not stressed about the expensive food bill that you're going to have to pay. So this is, by understanding personal finances, this is going to improve your life. It's going to improve your well-being. You're not going to have that stress. You're not going to have that mental load that you're worried about your money, where the next your money is going. It's about improving your spending, improving your saving, and then moving on to improving your investing. Okay. The ultimate aim is to have enough assets that are going to pay you an income so you don't need to work. So these are my books. So just before we wrap up tonight, so yeah, these are my books. So go to moneytips.org/books, and I've got 11 books now that are published, available on Amazon or available on my website. And I've researched some of the best books of all time. So Leonardo da Vinci wrote a book that no one knows about. There's a book called Stoic Philosophy. Stoic Philosophy is, if you've ever seen the film Gladiator. So Gladiator there was 3 writers around that time. Marcus Aurelius, who was at one time the most powerful person on the planet. So he controlled the Roman Empire and the Greek Empire at the same time. And yeah, he wrote a book called Meditations. It's probably one of my favorite books of all time. And so Stoic philosophy is Marcus Aurelius. Seneca, who talks about the art of happiness, and he talks about a lot of things about knowing that it's memory, I can't say it, but it's basically remember you will die in Latin. And it's basically, yeah, if you think that actually we're all going to die at one point, and that gives you that empowers you to live for the day, essentially live for now, live for the day, seize the day. All these phrases come from Stoic philosophy. And then the other book is Epictetus. And essentially, this is 3 books in one. So 3 of the great Stoic philosophers in one book, and that's available on my website. On Amazon, Leonardo da Vinci wrote a book, one of the great books of all time. It's known as one of the great lost books because he didn't actually finish it, but it's still got so much profound wisdom in there that you can just pick it up and read it, and it's brilliant. Then Henry Ford, who started the Ford Motor Company, and he basically created the mass production, the assembly line. If you're a budding entrepreneur, this is a great book to read. And also that book comes with a bonus of the Wright brothers. So the Wright brothers invented the aeroplane, and they tell their tale of how they invented the aeroplane. That's a real good book, the Henry Ford. And then Science of Getting Rich, which is probably one of my favorite money books all time. It's a bit out there, a bit woo-woo. But if you can get your head around the science of getting rich, it'll blow your mind about wealth, and it's a step-by-step guide to riches. That's the Henry Ford book there, and this is the Science of Getting Rich, and it also includes the Science of Getting Well, which is his other book. This guy called William Wallace Wattles, sorry. So it's actually this book was inspired. It inspired the book called The Secret, which was it was huge in kind of personal development circles. It sold 35 million copies, and it was based on the learnings from this book. But this book's the original and best, really. I've got a book on feminism, the best books by female writers. Reminiscence of a Stock Operator is a real great. It's a tale of it's basically a fictional tale of this guy by Edward Laferne, and he basically talks about this stock market. He buys and sells stocks during the Great Depression. He at one point was the richest person in the world, then he lost it all. It's an amazing tale about losing and making money again. And if you want to understand stock market, this is one of the best books of all time. I've got a trading planner. If you trade, we're talking about investing today, but if you speculate and trade, this is one of the best books to track your trade. So track your trade. I used to be a trader. I traded natural gas for Shell Energy. My biggest daily gain was £940,000 in a day. I made hundreds of thousands of pounds in other days. I made millions of pounds trading the stock market or trading the gas market. And I've put basically a trading plan. It's like a diary or journal that records your trading activity. And it's a deciding factor to be consistently profitable trader. It's highly recommend it. Just write down your trades and also give my 17 tips about how to trade better. So we've got a life planner, which I talked about briefly. And I also got On Liberty, which is a book by John Stuart Mills, he's got 3 books in one. It's a philosophy book. He was known as one of the best philosophers of all time, but he's an English philosopher. So yeah, that's my summary today. But we plant a tree for each book, each millennial money mindset book. So we've got 11 books, 3 online courses. I've got Invest in 90 Minutes. I've got Automate Your finances, give yourself more me time, and I've got Build a Business in 30 days. So those 3 courses are available on Udemy, or go through my website, moneytips.org. There's a members area. So if you sign up today, go onto the Patreon account and you can go into the members area. It's got loads of resources, courses. You get all those courses for free. You get support. You get a free gift each month. And you can also, I've got the card game called Football Formation, Asset Allocation and Learning Experience. And I also offer one-to-one money coaching. So there's a 6-week money coach course, which we have 3 meetings. I give you some exercises. We go for your savings, your spending, and your investing. And we basically create a life plan around you and basically give you targets to basically improve your personal finances. So yeah, that's Money Tips. We educate, inspire, and give money coaching, empower you to make your own decisions with money. But yeah, hopefully that's good. I'm going to stop recording now.